All right, guys, thank you for chiming in today. Today, we're going to be talking about S Corps and why you should take advantage of health savings for your business, the health insurance deduction for your S Corp. I'm so sorry, guys. I was trying to go live on Facebook and YouTube, and I, of course, forgot to hit the live button. So I apologize. But anyway, if you're watching and you did not get to join, you are not able to join us live and you're watching the replay, please go ahead and do hashtag replay at the bottom to let me know that you're watching. And if you have questions, put them below and I can help. That'll help me with my future topics. Anyway, my name is Pamela Ferguson. I'm a tax advisor of Pajeco. I've been in business for over 21 years. And today I'm going to talk about Tax Strategy Tuesday, which is health insurance deduction using the S Corp. So many of you guys have LLCs, and you create these LLCs and you elect S Corp status, and then you don't realize that you're now actually an S Corp. So you're who I'm talking to today. Those who have elected S Corp status and those who came straight out the gate as an S Corp. Health insurance premiums that are paid by the S Corp can be a tax deduction. So as a business owner operating an S Corp, there's a specific strategy related to health insurance costs that could benefit you on the tax side when you're filing your 1040. Because at an S Corp, you are an employee of your company, because you can't be an S Corp if you don't hire yourself as an employee. So you're the S Corp shareholder. You're going to deduct your health insurance premiums, provided you do not take that Affordable Care Act premium tax credit. If you look at your form that is given to you from ACA, or if you log into your account, you will see that they will show you what your premium tax credit is. Sometimes it's abbreviated as PTC. So you got ACA, Affordable Care Act, and you got PTC, which are premium tax credit. At the end of the year, what we do is gather those forms, we reconcile your account, and if you have additional credits left over because your income is lower than reported, you get more credit. If your income is higher, then what happens? You get less credit, and sometimes you have to pay that tax credit back that you took during the year. Sometimes you get to get more of a refund because you didn't get all of your premium tax credit. But we're going to show you a way how you can take that premium payment and run it through the S Corp so that you can take better deductions. So the S Corp, it must pay the premium directly or reimburse the shareholder employer, which is yourself, for the premiums paid. The premiums has to be included in your wage on the W-2 form, which is box number 1. You do not want to put that premium amount in your box 3 and 5, which is for FICA and Medicare taxes. You only want to add it to your box 1. So if you had $10,000 for the year paid in health premium and you paid yourself $50,000 a year, what you're going to do is report $60,000 in box 1 and your $50,000 in box 3 and 5 if it works out that way. But for easy numbers, that's what it's going to look like. So reporting it on the W-2, the health insurance premiums that are paid by the S Corp to you because you're the employee will be included in box 1. And remember, box 3 and 5 is going to be for Social Security wages and Medicare wages. So when that W-2 produces, your box 1, 3, and 5 will not match. 3 and 5 will likely match. So the deductions on your tax return, your personal 1040, you're going to then take that health insurance premium on the 1040 and reduce your AGI, your adjusted gross income. We call this the above the line. This is a deduction that we can take above the line. Anything we can deduct above the line always going to lower your AGI. So you're going to take $10,000 and you're going to reduce your AGI, meaning now you have less taxable income. How are you eligible for this? This deduction is available to those who own 2% or more in the S Corp. So let's just say your S Corp has other shareholders in it and you own 1%, somebody else owns 99%. Then you wouldn't be eligible. But if you own 30% and another person owns 70%, you're eligible. And then, of course, if you own 100%, that's a no-brainer. You are eligible. The health insurance plan must be established by the S Corp by either paying the premium directly or reimbursing the shareholder. So what does that look like? Either I'm going to pay Blue Cross Blue Shield directly, or I'm going to pay myself as an employee of my S Corp. I'm going to pay my premium, and then my S Corp is going to reimburse me, which is not taxable to me as the employee, because reimbursements are not taxable. And then ACA has what they call their premium tax credit. You as the shareholder will not claim your premium tax credit throughout the year if you want to deduct this way. The IRS does not allow any type of double dipping. So if you claim that deduction, you're going to forfeit your credit. So you don't want to double dip, meaning you don't want to take a premium tax credit. So if your bill is $1,000 a month and your premium tax credit is $500, meaning you only pay $500, you don't want to pay the $500 because that means that you're taking that premium tax credit throughout the year. You want to pay that full $1,000. All right. So to implement this strategy, what you want to do is reach out to someone like myself, a tax advisor, or if you're already working with one, you can definitely mention this to them. They should be able to show you how to implement this, how to pay the premium or reimburse you for the premium, how to include it in the W-2 wages, how to file that 1040 in order to take advantage of the credit. All right. So the advantages and considerations for this strategy is going to be the tax savings. Of course, it effectively reduces your taxable income, and it's going to increase those tax savings in other areas, because remember, your AGI is being lowered. It's going to assist you with avoiding double dipping. So if you listen closely to what I explained to you just now, you're not going to double dip and hear the IRS send you that dreaded letter about your premium tax credit versus you taking that deduction, because I just explained to you how to do this properly. And then you're going to be in compliance. You're going to make sure that you're following IRS regulations properly by documenting the premiums are being paid correctly, and the W-2 is showing correctly reported premiums. And on your personal tax return, you properly deducted it from your AGI. So in conclusion, you, the shareholder, you're deducting health insurance premium, you're avoiding paying the ACA premium tax credit or accepting that ACA premium tax credit paid to you throughout the year. It's very crucial that you want to follow the IRS guidelines to a T to ensure that you do not knock yourself out of maximizing this tax savings. Consult with a tax professional like myself so that you can implement this strategy safely and effectively. Thank you guys for watching. Again, if you are watching the replay, please hashtag below that you are watching my replay. And also, if you have any questions regarding anything that I stated today or any other live that you've seen, please send those questions over, so that helps me to know what topics you guys want to hear about, what you guys want to learn more about, and I can be more effective in sharing my knowledge with you all. Thank you guys. Don't forget to visit www.pajako.com. That's www.pajako.com to sign up for our monthly newsletters. Sometimes we send out some weekly information where you're going to get valuable information from a wide range of things under tax advisory. That could be debt, that could be funding, that could be credit info, that can be payroll, that could be tax, anything in the world of finance, we will be sharing with you. You guys have a great day.